Well, hello again, everyone, and welcome out to your weekly live currency midweek update here. This is Ankit, and I'll be going through the markets, taking a look at what's happening so far this week, and then talk about our upcoming 24 hours. Keep in mind, this is a holiday shortened week, so that means that we have one less day to work with. Now, currency markets will be open on Friday, but this is where broader markets are closed. And we probably don't see a whole lot of activity. That's what we see around these holidays here. So I'm sure everybody has plans as well. So again, this is a really good time to take advantage of these holidays as you get so few in the markets. All right, so you know the deal. We'll be talking about markets. We'll be taking good things. But if you have any questions, just type in the chat box. I'll take those questions as we go. Any currency pairs you're looking at, just type in the time frame, the direction you're looking at, and we'll discuss that further.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the Apply button in the video description. Let's break down what happened today.
And we'll be breaking down, looking at market price action. We'll take a look at news events, take a look at what's happening in the currency baskets. And then again, we'll take a look at those possible setups. So let's get into it. So looking at the markets today, and so far, I must say that market have gone from, sideways to now melting up. So if you look at the broader markets broke out to new highs, and they just continue to extend higher. So this is, again, we call it a melting up, where market just doesn't get knocked down with any sort of bad news. Now, one thing I want to point out today is we got this very ugly private jobs number report today. ADP numbers down negative 33K versus 99K. And now this is the first negative report since February 2022. And this is where, as a trader, you say, well, the economy is getting weaker. We've seen economic numbers getting weaker. We're getting bad jobs, early jobs number here. We'll see what happens in the non-farm number. Again, this is going to give some red flags. And at the same time, you look at the markets, and market just continue to do its own thing. So this is where we always say market sentiment is very important. It's not about the news. It's about how the market react to it. And there will be many times where you get a good report and you get an opposite price action, and you're left scratching your head. What happened here? But I've learned that over the years of trading is that, hey, don't fight the markets. If market wants to go higher and ignore the bad news, well, that's what it is. It's the same thing to a couple of months ago when we had markets falling apart. Any good news did not really, help the markets until we really saw a big reversal. These economic reports did not make a big difference. So we are seeing interesting stuff here. But keep in mind, there's a lot of chatter about, Fed should cut rates. Now, weaker jobs report confirms or helps them make that decision. And I think that's where maybe the negative news is positive news for the markets, because that might trigger a rate cut. But I'll take a look at those bond yields. I'm not really seeing that in the yields there. Now, another big surprise this week is the British pound. And if you look at the British pound, it had a pretty negative sort of price action. It's the weakest currency so far this week. And the question is, what happened there? Well, one of the things that I can point out is the bond yields in UK bond yields. They spiked higher, which again, raising the borrowing cost. Now that is resulting into a negative price action in the British pound. So we went from a very strong British pound to now a very weak British pound. So that's really the big wild factor so far this week. But if you take a look at the numbers so far this week, it's more in line with what we have seen. Money going into the European currencies, Euro Swiss franc going higher. The Kiwi not really getting much action here. CAD slightly higher. Aussie maybe doing the best out of that bunch, but again, nothing too significant. Now, we have seen this tug of war happening between the dollar and the yen. As you can see that now dollar is down and the yen is up. Overall, neither yen is in an uptrend, neither dollar is in an uptrend, but they do sort of move in the opposite direction from time to time. It seems like that's what we're getting here. Now, this is a big one here. This is a massive drop in the British pound, 1.18%. So we'll take a look at it and see if this is just a buying opportunity, or is this going to be, giving more alarming signals for the British pound. Overall, you can see the money has been pretty stable and going into the European currencies. Now, this is the one that stands out, and we'll take a look at those charts there. So again, taking a look at the broader markets today, and you can see SPX up, World Stock Index up, cryptos are up, and then we're seeing continued gain in the gold and oil market. So pretty much everything is up. Now, the equity market definitely is sort of moving in this way where it's just melting up. And that's just what we are seeing here. Even though they're smaller percentage moves, they're just consistent percentage moves, and that's really what we're seeing over there. But overall, you can see it's a holiday shortened week, but market sentiment is doing okay. Now, in the crypto world, we're seeing resumption of some of the rallies. British pound, the Bitcoin Cash, Ethereum, they're all doing best. Litecoin is the one that actually doing the worst, but outside of that, everything seems to be flowing well. So here we are with the market outlook, and we are at a +3. No denying the fact that markets are very bullish. Remember, this is where we were, and I was kind of taking some bullishness off the table. We were hitting that 6,000 to 6,100 mark. But I mean, take a look at the last few days. 1, 2, 3, 4, 5, 6, 7. So 7 consecutive days of upswing higher, and it continues to stay strong that way. So we have the moving averages trending higher as well. And again, looking back at where we were back in April, market has made a big comeback. So overall, market sentiment remains bullish. There's no surprise factor in there. Now, one of the things that we always take a look at these broader market sentiment is just so we understand, are we in a risk on or risk off environment? And some currencies will respond, bullish or bearish in those manner. Now, there'll be times where correlations are very strong, and it's very important to take a look at these stock markets and take a look at the broader market sentiment. Going back to 2 months back in April, that was very much a leading indicator. Now, when we take a look at price action right now, I think we have seen a disconnect where Aussie or the Kiwi, usually they're the riskier currencies. They're not really catching a bid. It's the European currencies. So we're definitely seeing a bit of a shift. But this is important to watch because, if let's say there's a bigger turn in the markets, then you will see that price action going into the dollar or going into the yen or even the Swiss franc. All right, so let's talk about the next upcoming 24 hours here. Like I said, because Friday is a holiday, everything is getting jam-packed into tomorrow. So if you take a look at where we are looking at tomorrow, the Swiss franc CPI overnight. I don't really think that is a big market moving factor. Again, none of these inflation numbers, remember a couple of years ago, these inflation numbers were the big hot thing. And over the years of trading, and you'll see that in the markets as you get more experience. Some sort of reports are more relevant in some times and then the other. And I know sometimes it's the hardest thing because hey, this used to be such a market moving event and no longer the event. And that's just the way market works in these cycles. And right now, inflation number doesn't seem to be the one moving the needle on the markets. So don't really expect a whole lot there. But we have this, the report here, the U.S. employment report. Usually that comes on a Friday because of a holiday is coming out on a Thursday. Now, this report usually have a bigger impact on the markets compared to what we see with the ADP numbers that we got today. I remember last month, we had a very contradictory report. The ADP showed weakness, and then we had actually a pretty good solid jobs report from the non-farm numbers. So usually, sometimes they're more in line, sometimes they're more opposite of each other. We'll find out. But if you take a look at the expectation, again, they're looking at 111,000 jobs created versus 139. Looking at the unemployment rate to tick higher by 0.1%. And with the hourly earnings to drop a little bit. So you can see that if based on this employment change, this is again looking at way stronger report compared to what we saw with the ADP numbers. Now tomorrow, if this number also comes out weaker than expected, I would definitely expect some bigger moves, especially as the market have retraced some of that move today. This again could really reinforce the fact that, hey, the employment situation is getting a little worse, and we could expect maybe the Fed to respond sooner. So that's really the tug of war happening here. The Fed is saying, hey, the data needs to get really bad for us to act sooner. So there's that anticipation that, hey, it's all about the interest rates. If they're going to cut, they're going to raise. And a lot of the movements is really based off of those expectations. So looking at the velocity here, well, not a whole lot of surprise when I look at the numbers. Velocity is definitely doing well on the euro and Swiss franc. Aussie at a 0, that's what we expect. Kiwi showing a little bit more weakness, and that's also what we expect. This is the one that was really a wild factor, is the British pound. Didn't see that coming, but we'll take a look at it and see if this is just a buying opportunity or if something has changed for it. Now the yen, you can see is a minus 1 on yen, plus 1 on dollar. Again, not a big moving currency so far. So, and then the crypto world here, you can see there's some resumption of that move in Litecoin, Ethereum, Bitcoin. Bitcoin Cash is sort of falling behind, but remember that was the best cryptocurrency for the last few weeks, and we're just seeing a rotation happening here. So, based on this information, let's just go in, do a live analysis, and take a look at some possible trades ahead.
Do you want to be a professional trader? Maverick Currencies is the oldest US-based Forex and crypto prop trading company that will pay you for trading with our capital. Trade our capital and keep 70 to 80% of the profits. We are looking for traders just like you that are hardworking and motivated. Click the apply link on the top right of this video to see if you have what it takes. That link takes you to a 4-minute video that explains the trader position available, and you read a list of FAQs that answer pretty much all the basic questions you have at this point. After watching the video and reading the FAQs, if you're interested, fill out an application, then you'll watch the full-length recruiting video, and then schedule an interview with one of our traders. Are you our next trader?
All right, so here we are with the British pound. I want to start with the British pound because that's, again, is the biggest mover. And again, the question comes to is something has changed materially, or is this something I should be looking into buy? So one of the things, like I said, you have to look back is, the bond yields, which is really causing this move here. So to take a look at the bond yield, so the symbol for that, again, is I think it's GB 1010Y. This is the United Kingdom 10-year bond yields. Now, if you click on that, and you'll see there's a big spike there today. And that big spike is really what caused some big move in the pound here. Now, when I scroll back, the one thing I'm looking for is that, has this happened before, where there's a big move and that's caused the pound to fall? Again, if you really look back here, I think it was back in April when we saw this sudden big jump in these bond yields right here. And we can see that this was, big one move day here. There's a bit of an inside candle there, and we've got a massive move here. And after that, you can see it just fell down. Now, again, we don't know exactly what happened there, but it was just a short-term spike. Now, this is, again, going back to the early April. So if you look at the spike here, this was April the 7th to the April the 9th and 10th. Now, what you can do is that you can kind of compare this to the pound here and see, okay, what happened at that time? And you can see that this is a bit of a correlation there. Every time we see that happen, look at the big drop that we had in this British pound. And that one kind of coincide with those dates, because April 7 to April 11, that's where those yields are spiking and the pound was falling. Now, when that settled down, when those yields settled down, you can see that there was a recovery that took place. So I think we're kind of seeing the similar thing here. Again, who knows? We'll find out. But I think at this point, instead of rushing in to say, hey, the pound is falling apart, it's broken below the 20 to 50, we should go start selling. I think that's where you really have to take a bit of a caution here, because I've seen that before. Now, does it mean that we should be looking into buy right now? I don't think so. I think it still look pretty ugly here. As we saw back in April, that was a 3-4 day event. This is just the first day of a candle. So I think at this point, you had a pretty nice little sort of a hammered candle there, but you can see that it's just not really reversing higher. So at this point, I don't want to really touch this on the short side or even the long side. But once those yields start to settle down, I think maybe we'll see a bit of a recovery to take place here. Because again, fundamentally, nothing really has changed other than those other than those yields here. So that's the pound. Now, I had a lot of questions about dollar because I've been talking about dollar, these these levels. As you can see, that dollar has clearly broken that support, and we actually had pretty negative. Since this reversal here, we just been down and down and down. Now we are approaching a very critical support. This is a support that goes back to October last year. Remember, we were looking pretty weak and then massive recovery there. Now let's go up to a weekly chart. And I want to highlight that this is a very important level of support for a whole lot of reasons. 1, 2, 3, 4, and now again a fifth time. So these levels, when they do test from time to time, this is where this support becomes a lot stronger, because every time it pierces through, it bounces off. So at this point, the question is, hey, should I be rushing into this dollar short here? And I think this is what we got to watch out for, this level. If this level gives up and stays below it, as you can see that every time, it dips below, it never had a confirmation. This is a weekly chart here. This is the only time where it dipped below and then it just have a massive rally. And even at this time, we just got to the point before having a massive rally. So just looking at this, I think you just need to be, using a little bit more caution here, because what happened around those strong support and resistance levels, sometimes we see a reversal. And a lot of times I remember being, younger in the trading world. And, when you do everything correct to the T and then it just goes the other way, you're like, hey, I just did everything correct by the textbook. Why did that happen? And then you start to realize, hey, there's a lot more, it doesn't matter what I think at that time, it's a support. Either it's going to break or it's going to reverse. That's really where those potential risks are. So I think dollar, you got to use a lot more stronger caution here. If this can breaks below it and let's go out in time, you can see that this have a lot more room to fall. This can actually depreciate a lot more than where we are right now. But do I want to make that call right now and say if it's going to break? I don't really, because I think this is where, don't want to be that bold to make that call here. I'd rather let the price action tell us. Now, on the daily chart, you can see that it just continues to sell off on those rallies. Any rallies that happen, it sells off. Look at this little wick over here on this candle today. So, I think the shorting the rallies has been the decent play in this dollar, but just watch out for that level. Watch out for that key level. And the best thing I do like to do around these levels is that just set alert. Hey, notify me when there's a reversal happening or there's a break happening. That's where we want to kind of be more aware and see which way it goes. Now on the yen front, you can see that yen still looks bearish to me. I can't believe that we are 3 years later, and 2022 is where yen start to turn. Like this is back in 2020. 2022 is where we really start to fall apart. I mean, this is the point, and we are 3 years later and still at these depressed levels. So at this point, as you can see that we are seeing 20 and the 50-day moving average continues to putting pressure through. So at this point, I think looking at that, I think yen cross pairs actually I think still looks the best here. Now let's go into the other currencies. Here we are with the Swiss franc, and this is a currency that I just not been able to figure out because it doesn't really follow that correlation. You can see that in the last 3 years or 4 years, look at where we are with the Swiss franc. It just continues to move in that one direction, and it does go range bound. Either it goes range bound or it goes up. I haven't really seen a downtrend happening much in this one. So we are testing that resistance level on this one. If you start to go in the longer term, you realize that we are sort of in this uncharted territories. And whenever we go in these territories, that's where there's not a whole lot of overhead resistance, and we start to see prices go parabolic. At this point, it is sort of pausing right there, but at the same time, we are far away from moving averages. It's not really giving us a signal yet. If they start to make it start to breaks below this candle and start to pull back, maybe then that will be in a pullback formation, and then we'll probably pare back on some of that strength in the euro Swiss franc here. But overall, this looks pretty bullish. Now euro at the same time, it looks fully bullish as well. This one again, if you look at the chart, this looks more bullish, and this one has a little bit more area to cover because this is not really at all-time highs. This definitely has more room to recover, but take a look at where we are. We are at the highest level in these baskets, in the last 15 years, and that's notable. And I think that's why we're seeing more recovery. Every time it pulls back, it recovers. I think that's the reason why, because the chart looks very bullish. So no real slowdown or signs of slowdown in Swiss franc and in the euro. Pound, we are seeing that, but like I said, I might just looking for reversals once those yields settle down. Now, when we go into the CAD's going nowhere. On a Friday, we actually had quite a movement on CAD, or because we had the news that the U.S. is breaking their the negotiation, and then the Canada backs off on some tax, and then here we are back up again. So this chart's going sideways. Don't fight the chart. This is just not going anywhere. Same thing goes with the Aussie. I mean, look at these movements. Look at these. Look at the range of these candles. They're not so exciting, neither on the upside, neither on the downside. These things are just holding steady. Now, we talk about seasonality. Is this what happened in this time of the year? Well, if you look back in time, last year, you can see we actually had a nice rally in July, late June and July. We had a pretty nice rally there. I'm not really seeing any of that coming in this year. So we'll find out if there's any changes happen. But so far, not a whole lot. And this is where we talk about correlation, not following the correlation. And then the Kiwi, on the other hand, same thing, sideways for the most part. If I go on the longer term time frame, you realize, hey, this is just going nowhere, and it has a strong resistance level, but not going anywhere. So unless it really breaks out, you want to keep those expectations steady. So if you are having a hard time trading right now, noticing a lot of your setups are failing, just pay attention to what currency you're trading. Because, if you look at the Aussie and Kiwi, they often fail. If you're looking for a bear setup, they will fail. And if you look at the bullish setup, and that will fail. And because that's just the nature of the movement that's happening, it's a lot of back and forth, one day up or one day down. And that's where you have to set your expectations, where, maybe I can take advantage of that short-term opportunity. But as for a trend goes, that's whether or not the trend is. Now, on the other hand, if you're trading the euro on the directional side, you realize that, hey, this thing is more easier to trade because every time it pulls back, the gravity just pulls it back up. Now, that's when you know that you're playing the right currency in the right direction. So really, that's where we are. I think as much as we like to take a look at some rollovers happening, some big direction change, this is more a cruise control here. A lot of the movements are going, kind of the same way, except this British pound. That's where the big opportunity was. There's not a whole lot there. Now, let's take a look at some setups here. I want to start with the dollar yen. And again, if you have any setups that you're taking a look at, just type in the chat box. I'll take a look at it as we go. Just keep in mind is that, duration is very important. The question really on a Wednesday here is that, do I want to hold a position over the weekend? And if the answer is no, then that allows you to pick a time frame, and based on that, you can decide, okay, where do I want to be more active, and how long I want to hold that position for. So here we are with the dollar yen. As you can see, that this thing is just moving sideways. So as we get towards the bottom end of the range, you notice that it keeps sort of reversing. So this is a decent range to trade with. I mean, on the bottom end, you have 142. On the upper end, you have about 146 to 148. So I don't mind being a buyer at those support levels. And the biggest thing to really think about is tomorrow when we get the job report. If those jobs report comes out a lot weaker than expected, I think we probably get a little push in the dollar to the downside. But let me show you what happened today. So I'm going to show you the bond yields. So you take a look at the 10-year yield for the US. And I'm going to go down to a shorter term time frame. And this is where you'll feel, even the shorter term, like 2 years. So you notice that there was a big drop that happened right on the news. And pretty much right after that, we recovered. So, we talk about the price action matching what we saw, and you can see there's big recovery there. So it seems like there's less of a worry. And right now, yields are, it looks like the yields are trying to rise here, where it should have been going down. So what happened when the jobs report comes? I think one or the other. Either that the report comes out better than expected and we see yields sort of rise, and we'll probably see a dollar rise with it. I mean, they take a look at the price action today. When that news came out this morning, we can see that the dollar had a bit of a fluctuation right here, but overall, dollar was looking decent, but then it just sold off. If that comes out tomorrow, and if the yields do get stronger, we'll take a look at it and see which way dollar goes. But at this point, like I've said before, we are up against a very strong level of support. I don't want to be, selling into the support. But if you see a rally to sort into, yeah, maybe you can find a decent opportunity there. But again, this is not melting lower compared to what we see in the euro, which has been melting up. And I think if you want to take a look at these setups here, euro kiwi has been moving decently here. Here's the daily chart. This looks like a nice little bullish high base, because take a look at this is the resistance here. We broke resistance and we're just basing here. So this one, again, on a higher time frame looks better to me, because again, so the kiwi is not really strengthening here. If the euro continues to strengthen, I think there's a decent opportunity there. We can also take a look at euro against the Aussie here. This one is more sideways, but you can see the pattern here. This is a high-base pattern. Now, if I take a look at pound, can I look for opportunity to, if I want to buy this pullback here? Now, pound against the kiwi, you can see that this is mostly the pound, and pound is still weakening here. So definitely don't want to be going after shorting it. It's going after here. I think we need to see some sort of a reversal sign. I don't see a reversal yet in here. So I think pound so far we can kind of leave it on the sideline here. Here we are. This is a 4-hour candle, still showing some weakness over here. So perhaps I think we can kind of go back to those euro against the yen. That has been definitely a great pair to trade. Look at this sideways sort of a price action in a bullish market. I think this is just some energy making some base here. So look for that 170 area to be broken for this to continue moving higher. But you notice that whenever you have a direction in place, pullbacks are great opportunities to sort of buy into. That's how some of these currency setups are setting up. The question is, where do you get in? And I think those pullbacks has been good opportunity to buy into. Swiss franc, I'm going to be a little bit on the hold here. I think it's just because of the way we are right against our resistance. Also, let's just take a look at euro Swiss franc. As you can see, that euro Swiss franc has been mostly trending lower. On a daily chart, you can see this thing is also sideways now, getting towards the bottom end of the range. So yeah, as you can see, not a great looking setups. Some of the setups that are good looking are sort of in a basing formation. So not a whole lot of reversal, probably a little bit more continuation. And again, I think that's just the way how things are moving. Volatility is very low. Remember 2 months ago, volatility was so high that, every day was like a mystery, like what's going to happen today. To now, we're seeing volatility continues to dip lower, and this is the volatility index. As you can see, volatility is down to the lowest level, or this is the lowest sort of a benchmark here for the last few years. We're getting towards that area. All right, so let me go through some questions here. Thoughts on dollar Swiss franc below 79. Let's take a look at dollar Swiss franc. I must say that dollar Swiss franc is one of those charts that you look back in time, and I'm going to start with the monthly. You can see how weak this chart is. And last time we touched this level where it was like back in 2010, 2011, and then that's where the Swiss franc sort of intervened, and then the peg the currency, the euro, and that really curbed it. But you can see that for the last few years, we've kind of gone sideways for the most part. Now this looks pretty bearish. This is the last 3 or 4 months of candle looks pretty bearish. So everything is pointing out to the bearish side. Here's the 4-hour chart. And like I said, bear rallies are just good shorting opportunities. And this one looks pretty weak here. So I think the question you asked for was mostly on the hourly. So let's go on the hourly chart here. Again, on the hourly, you can see you got resistance right here. You got a support right here. So even though if you want to base it on an hourly chart, you got a decent risk to reward if you think that this is going to go all the way down to the support area. So I think it depends on how long you want to hold that position for. If you're looking for a day trade, you're looking for to get in and get out towards, the end of the day, then, you have to kind of see, okay, which one is the best timing for it. Now, knowing that tomorrow you have the non-farm payrolls, I think I would steer away from holding it on an hourly chart. Maybe I can enter it after the news event tomorrow. But, that's the one thing we have something coming close to us. Now, on this dollar Swiss franc on an hourly chart, the next support is at 79. The highs over here is about 79.40. So again, I don't know if this is going to break this lower overnight to get to that point. So I don't love the risk to reward, to be honest, at this point. If I have to look for a trade, we're already in the second half of Wednesday. We are only left with tomorrow. So if I have an opportunity to take, I think I would rather just wait till the U.S. job support tomorrow and see which way it really moves. I think that makes it a little bit more of a better sort of timeline for a trade setup here. But yeah, I think if you're looking for that direction, that looks, 4-hour chart, you can see each time it has some bear rallies, it has weakened. And so far, as long as it stays below the 20 and the 50, it'll be more likely below the 20. This is what you can say, well, I want to put my stop right above it. If it weakens, perfect. If it reverses, then I'm out. Right? So that's a decent call here. But at this point, this is already at some pretty key levels here. So here's a question now. Can I look at something else? Can I look at euro dollar? And euro dollar, you can see this thing has, kind of looks similar. So this one, again, giving me a little better technical setup, to be honest. And if I want to go right above 118 level, this is the rising 20 MA. Yeah, I think this is a workable sort of a chart here. But you can see that this thing also looks so extended. 1, 2, 3, 4. It looks very extended, but it keeps going higher. Yeah, so sometimes, these are the hardest one where, you look at these moves happen and like, oh, the risk to reward doesn't look that good. And sometimes, you have a very good looking chart, but not a whole good looking risk to reward. And a lot of times I would pass on those setups because I want to be in a good reward to risk ratio because where it's worthwhile to take that risk. But I think, euro dollar actually looks pretty bullish here to me as well. Now, question is, can we find a reversal opportunity in pound dollar? You can see that the pound dollar did sort of pull back to 136, bouncing right there. So this bullish setup is still intact. Here's the 4-hour chart. Is this going to recover? This is support right here. This is where, you can play that risk to reward, say, hey, I think this is going to get towards that 137.50. See if it can get above this moving average there. But I'm not ready to pull the trigger on the pound yet, but again, that's one I'll be taking a look at. All right. Let me know if you have any other question, but, I think these are the markets where, because the volatility is low, you want to make sure that you're not over trading these markets. There's a handful of opportunities you get. You take a look at risk to reward and pull that trigger. But volatility is not really a big concern here based on how the markets are moving here. I also had earlier, somebody had asked me about dollar CAD. As you can see that the way dollar CAD is moving, on a daily chart, if I think about this daily, there's a strong support at about 135.70. It's sitting at about 136. So there's about a 30 pip move over here. So at this point, this one I will be only interested in if it breaks below that level. But so far, you can see that it's until it really breaks lower. I have no interest in getting in here because it's only 30 pips away from the support. So don't really, not in a rush to jump in here, but only if it really breaks that further support. All right, some of the questions here I'm just going to go through some of the things I had. Somebody had asked me earlier, Aussie CAD. This thing again, they're not really deviating from each other. I don't think there's any opportunities there. Some of the Swiss franc crosses, let's take a look at those because they have been moving nicely. You can see these were in range bound and it just continued to sell off here. So Kiwi Swiss franc in a nice little bearish formation here. Every rally is getting sold. So as long as it stays below these moving averages, I think they do look bearish. Same thing with Aussie Swiss franc. Let's go back to Aussie Swiss franc here. Same thing is continuing to weaken here. So again, I think if you really look at these, when things are directional, bear rallies are better opportunity to sell rather than looking for breakout. Because when the breakouts are happening, they're not the fireworks. They're not moving in a way where, oh, I missed the boat. But when you get these big rallies, I think those are decent opportunities to buy and short into. I also had Aussie dollar that, if you take a look at this one, it did break above that resistance. Not the best looking setup you can see, but on a 4-hour chart, I think it looks interesting. So a lot of these dollar pairs, I would say, they kind of look interesting on these 4-hour charts as they are sort of in this continuation formation pattern. So it doesn't matter if you take a look at euro dollar or dollar Swiss franc, they're all kind of look similar to me here. But yeah, maybe that's the next opportunity. But even dollar yen continues to be sort of underperforming here. So yeah, perhaps that's the only opportunity. But remember, until tomorrow, 8:30 a.m. Eastern Standard Time, we get that report. So either that's going to help you trade or it's going to hurt you trade. But you can totally be in cash if you're not 100% on how that's going to move, and then you kind of go for trading on the news and then exit by the end of the day. But like I said, on a Friday, markets are closed, so things are likely to quiet down. And honestly, what last thing you want to be worrying about is what's happening in the markets, and just rather enjoy the holiday and come back in next week. All right, so that's pretty much it. I think all the questions we covered here. I'm happy to see everybody's kind of looking the same way, and I'm happy to see that June was definitely a better month for a lot of traders compared to May, where we had a lot more range bound price action. June, so the second half of June is really where we start to see breakout. And pivoting is the key here. When things go range bound, you trade that way. When now things are looking directional, you have to pivot and trade a little bit more directional strategies. So I think that's what we're gonna play here, and then see what happens tomorrow. But till then, enjoy your holiday, I would say, and then we'll come back next week and get back into the full swing of things. And if you have any questions, meanwhile, send me an email, or the best, ask on the Discord. I'm very happy to see that everybody's participating, and I think it's a way to kind of get some group participation on those chats there. Well, thanks everyone. We'll see you next one. Happy trading.